Hi, this is Vanita Adams, and we're doing our episode 1 of the Buyer series, Ready to Buy Your Home. Today, we have mortgage consultant Derek Hungerford with us, joining us today to discuss what you need to do before you get pre-approved. Hi, Derek. How are you?
I am doing well. How about yourself today?
I am fine.
Good.
Well, tell us a little bit about yourself.
Well, again, my name is Derek Hungerford. I'm a certified mortgage advisor. I've been in the business for about 24, 25 years now.
Okay.
I've been blessed to be able to help about 3,500 families. I love what I do. I love educating, really, in terms of buying a home and finances. And so I'm looking forward to sharing today.
Okay, thank you. And when Derek talks to us about educating, he definitely has been about his word. He has written a book, A Mind to Build, and it has 5-star rating. Be sure and check it out. Thank you. So, Derek, today is the first day of many conversations, but I'd like to focus today with you again on folks getting ready to buy their home. But I think the first thing we'd like to talk about is, what are the benefits of buying a home?
Well, there are several benefits. One benefit is the tax benefit. You may know that homeowners have tax benefits that renters don't. One is that you're able to live in the house for the last 2 of the last 5 years and sell that property and make all the way up to $250,000 for a single person and not pay a dime in taxes. Okay. And that's a very good benefit. Also, you're able to itemize on your tax return. So you're able to kind of really save some money on your taxes by having a house. The second thing is leverage. And when I say leverage, that simply means having the upper hand, being able to use other people's money, OPM, to buy the biggest asset that you can. And most people don't have $250,000 to buy a house. So you can actually borrow that money, make all the benefits, and be able to live in that investment. That's one of the only investments that you're able to buy and live in at the same time. And then the third benefit would be the equity benefits. So equity is the difference between what you owe and the value of the property. And as you stay in your property and make payments on a monthly basis, your equity grows. So that's a very good benefit as well.
All those benefits sound very good. So in your opinion, what are qualifications of buying a home?
Well, when you apply for a loan, the underwriter looks for 3 primary things.
Okay.
Number 1 will be your debt to income ratio. And what we do is we look at your monthly debt and compare that to your monthly income. And there's a ratio that we're looking at. We want that ratio to be 45 or less. That simply means that 45% of your income, your monthly income, is being used to pay your bills. Now, if your debt to income ratio is 60% and 70%, then that's a problem because you don't want to be that high in your debt to income ratio. Okay. So that's number 1. Number 2 is your credit and credit scores. We look at both. And then number 3 is how much money you have for a down payment, or if you're using a program to put money down on that home.
Okay. Let me ask you this. This is a side question, especially regarding that percentage with debt to income, because I see folks with a lot of cars and the car notes are pretty high. Is there a ratio that is factored in or taken into consideration for your car note, and what would that percentage be if there is one?
Well, there's not a ratio per se. But I will say this, if you have less than 10 months to go on paying that car, we don't have to count that in your debt to income ratio.
Oh.
So if you can pay it down to 10 months, then that goes away, which is a good thing. And I would tell you, Vanita, not only that, the biggest thing that I've seen is not only car payments, but student loans. And we can have a whole segment on student loans, but that has been really a killer for a lot of people. And so we have to figure out something that we can do to help first-time home buyers who have student loans.
Okay, well, thank you. I'm going to consider that an invitation for another episode.
Indeed.
So I know when I talk to clients or potential clients, I'm asking them, are you pre-qualified or pre-approved? So discuss that for us and give me the pros and cons of both.
Very good question, because there is a difference. Pre-qualification simply means that I or your lender has taken information verbally over the phone. We've gotten where you live, how much you pay in rent, how much you make, those cursory things. And we take your word for it, basically. And with that information, we do pull a credit report and we do a pre-qualification based on verbal information. Now, to take it a step further, we want to get what is called a pre-approval. Pre-approval is when we actually collect documents from you. So we want to see the W-2 forms. We want to see the pay stubs. We want to see the tax forms. And we'll do a calculation to make sure you're okay in those 3 areas. And then we would run your information through what is called desktop underwriting. Desktop underwriting is an automated system that looks at your profile and gives an approval. And that is a bona fide approval. And so that's a little better than getting just simply a pre-qualification.
Okay, so what I'm hearing as well from a business perspective is if I have someone that says they're pre-qualified, we can go out and look at a home, but it's based on their word. Their offer could be submitted, but it's a possibility that they may not be pre-approved once all the documentation is submitted and reviewed. Is that possible? Okay.
That is possible. So it's very good for us to collect those documents. Now we issue pre-qualifications all the time. I won't say that we don't.
Okay.
But when I pull a credit score, when I pull a credit and look at the credit score and I have a 750 credit score and someone says they make X amount of money, and I can really kind of look at a situation and know that we're pretty good. But every client, we still go forward and get that pre-approval as well.
Okay, just to be sure.
Just to be sure.
Okay, so to inspect what we expect.
Exactly. I love that.
Okay. Now, so there are different mindsets for folks that are getting ready to purchase their home and things like that. Like you said, working in their credit, their debt to income ratio, things like that. Where should the mindset be when you're thinking about buying a home?
It should be much different than renting. You should definitely budgeting. I'm going to say that number one.
Okay.
It's a sacrifice. Buying a house is a sacrifice because you can't continue to do the same things that you were doing. You have to make a sacrifice. You have to cut back on spending, going out to eat, doing your hair, nails, and all that stuff. And I get some looks when I give my seminars. When I start talking like that, I get some looks. So I do understand, but the bigger goal is something that you have to really focus in on because it is a different mindset. When you become a homeowner, it's a different mindset. Again, you get all of those different benefits, but you really want to kind of train yourself prior to getting into being a homeowner. You want to become that homeowner before you actually buy that house.
Okay. Okay. Yeah, I did cringe a little bit when you said hair and nails.
Yeah. And then I would add too, as you go through the home buying experience, one thing that I would say is to separate the emotion from the buying experience.
Okay.
And a lot of people, they kind of attach buying a house emotionally, and you can get hurt by doing that. You can make mistakes by doing that. Money is tactical. It's not emotional. And so the mortgage loan is a tool. So we got to make sure that you can use your emotion to find a house and all of that good stuff. But once you get into the process, that has to be tactical and understanding that we have to separate that from the buying experience.
Okay, that is so true. I do like to ask people when they come to me is, why are you buying a home? For what reason? That also determines mindset as well, kind of get inclination. So what type of documentation should a first time or new buyer prepare so that they can get pre-approved?
Okay, so, and these documentations are things that people should have at their fingertips anyway, at all times. It's all about being organized. So that's one thing I didn't talk about, but organization is one of the first things that you would probably need to do being a renter going into home ownership. But we would need the last 2 pay stubs. We would need the last 2 bank statements, the last 2 W-2 forms, and then the last 2 tax returns. A lot of times we don't use the tax returns, but we do pick those up just in case. And then the other ancillary things would be a copy of your social security card and a copy of your driver's license.
Okay. Okay. Oh, and you know what, Derek? What I didn't ask you about was the time frame to become pre-qualified or pre-approved. How long does it take?
Pre-qualification, we can do that within an hour, really. Again, because that's just a verbal conversation, pulling the credit report and doing the letter. So
Mhm.
that's no problem. A pre-approval usually takes about 24 hours after
Okay.
that. Now, that I will say this, though, it depends on how long it takes the client to send in their documentation. So if they can get it in real quickly, we can turn it around right quickly for them.
Okay. And are you using a portal or do they send it to you directly? Are they uploading it somewhere?
Yeah, they're uploading. They have their own personal portal. They'll get set up their own passcode, and it's a great way for them to communicate with us. We communicate with them, but they'll get a list of all the documents that they need itemized,
Mhm.
and they simply upload that. It comes directly to the processing department, and we get it taken care of real quickly.
I like that. And the other thing that we didn't cover in terms of time under the beginning process is how soon should a person start? I do like that you said we need to be organized, but
Mhm.
if we start a year out from a realtor standpoint, we're probably going to need about 60 days with you in
Yeah.
terms of finding
Yeah.
a home and going through the process with the home. When should we start preparing for a home?
It really depends on that person. For instance, if you have credit challenges right now, and you have credit challenges, now would be the time to reach out to a lender to find out exactly what you need to do. Oftentimes, I talk to home buyers who say, "Okay, no, I just want to kind of take care of my credit report
Mhm.
and do some things." Well, there may be some things that you're doing on your credit report that you don't have to do.
Exactly.
And we look at certain things that the underwriter looks at. And so it's better to get counsel. You have to get counsel at the very beginning. Even if you're a year out, get counsel right now so you know exactly what to do. So you can put in some goals and some matrices so
Mhm.
that you can know exactly what to do and when to do them by.
Wow, that's good. Awesome. Awesome. So I also get folks that say my so and so is gifting me money for the down payment, or they're going to help me buy the house.
Mm-hmm.
Talk about that.
As is great. If you have a rich uncle or a rich parent, brother, sister, it has to be a relative though.
Okay.
And It's funny. I think you can have a best friend, but I don't think you can have a cousin. So it's an interesting rule. But
Yeah.
anyway, it's if it's a relative or you can prove that you have a relationship with this person, then you can get a gift. That gift can be for the down payment. It can be for the closing costs.
Okay.
And the good thing about it is that the donor can actually just send that money directly to the title company so that the title company will have that at the time of closing. One thing that the donor will have to do is fill out what is called a gift letter. It's just simply saying that they're going to give this person $5,000, $10,000, and it's an actual gift. A lot of times, though, the donor will have to prove that they had the money to give that gift.
Okay.
And so the donor has to be prepared. The underwriter is not really trying to get in the donor's business. They're just trying to make sure that they had the money to give and that money that they have to give didn't come from a source that shouldn't have given that money to the donor, if you know what I mean.
Okay.
So you got to be ready for that. And if you're ready to prove that, then a donor is great.
So you said the money can go straight to the title company. It doesn't have to sit in the home buyer's bank account?
No, no seasoning on that's called seasoning when the money stays in a bank account for a certain amount of time. But there's no seasoning on a gift. That gift can come again from a family member. It can be given that day of closing as long as you prove that. And the donor can actually wire that money to the title company. Now, we will get verification that the money was wired. And again, that the money came from a specific account, their account. But it does not have to sit in that the buyer's account for any specific period of time.
Okay. And can I purchase a home under a business name as a first-time home buyer, like a LLC or trust or something like that? Or do I have to purchase it in my name?
Usually you will have to buy it in your own personal name.
Okay.
There are loans out there where you can use a company's name and LLC name. However, those stipulations are very different than a first-time home buyer.
Okay.
For instance, with that program, you might need 20 or 30% down.
Okay.
Because it's a different type of loan. But if you're a first-time home buyer, 99.9% of the time, you're going to just simply buy in your own personal name.
Okay. Great. Thank you, Derek. Now, I know there are patterns. You talked about the mindset preparing to buy the home. What is the mindset and the behavior that should go on from your finances while you're looking for a home? Sometimes we've had people go out after they get that first, you're pre-approved, buy things, big ticket items, furniture, cars, trips. Talk about that for me, please.
Please, please, please don't do that. Number one, don't quit your job. We've had that happen, believe it or not. We've had a person who had not a pre-approval, not a pre-qualification, but a full approval.
Okay.
And you got to realize that the underwriter will pull another credit report the day of closing, the day before closing, 2 days before closing. And in this instance, the underwriter pulled another credit report, and the young lady had gone out to buy a car, Mercedes-Benz. I'm never going to forget this. The payment was $549. It knocked her out in terms of the debt to income ratio. And guess what? Her loan was declined after that.
Wow.
So please, please don't quit your job. Do what you were doing. Continue to do what you were doing. Please don't go out and spend money on a car or anything. No big items at all, really.
Okay.
And you want to kind of keep your bank statement as it is. You don't want big deposits coming in. You don't want big withdrawals going out. You want to kind of keep it the same. Okay.
So that's interesting that you say that. So what if during that process, I'm pre-approved, find a home, put it under contract, but I may be in a contract position and I start a new contract, or I lose my job, but find another job right away? How is that looked at?
That's no problem.
Okay.
And well, let me put it this way. As long as the industries are the same. For instance, if you were an administrator and now you got a new job and all of a sudden you are driving for Metro.
Okay.
Two different things.
Okay.
But it has to be related. If it's related, then there's no problem, especially if you're getting an increase in your income. No problem at all. But you can't change jobs where the two industries are totally different. Okay.
Okay, so I have to ask you this other question too. So if I'm working two jobs,
okay.
One, I am an administrator. Two, I do drive the bus on the weekends. But I stop being an administrator and become a full-time bus driver, making good money as well. How would that look?
That's an excellent question. And that should be okay if you've been working for the Metro, driving Metro for 2 years.
Okay.
If you've been, had that part-time job for 2 years and now you switched over to a full-time job and you make more money, no problem.
Okay, that's good news. Now, what should I do after I go to settlement, get the house, get the keys in there, and now I need to look at my finances and budget again because I have mortgage, utilities, things like that at a higher level than I did as a renter. What should I do now?
I mean, well, pretty much the same things that you did to prepare to become a homeowner. But I will say buying a house should be the centerpiece of your wealth building strategy.
Okay.
And a lot of people buy a house and just stop right there. They stop working on their credit report. They stop saving. They stop investing. So the house is really the first thing. I have a 7-step process that we could probably talk about at some point. But the number one step is to buy a house. The number 2 step is to track every single dime coming into your house and going out. Most people are not doing that. So you have to do what is called a business P&L, because when you buy a house, that is your business.
Okay.
And so you have to do a P&L. P&L is a backwards looking number, whereas a budget is a forward looking number.
Okay.
So know exactly what went out of your house, know exactly what's coming in your house. And then also you want to make sure that you save 3 to 6 months of living expenses.
Okay.
You want to have that money in the bank just in case something goes wrong. If you look back at the mortgage crisis that happened several years back, if you think about it, if more people had 3 to 6 months of living expenses in the bank, they could have weathered the storm. But most people don't have that fallback. And then if something were to happen, then, you go to foreclosure or whatever the case may be. So those are the first 3 steps. And maybe we can come back on to talk about the other steps. But track everything. I would say track everything, every single dime. Do it every single week.
Okay.
Or if not every single month. I do it every single week, but do it every single month. The other thing, again, is to save. You got to put money away. Too many first-time home buyers are going into the project thinking, okay, I want to pay my house off. Well, no, that's the last step. You want to get these other things in place before you get to that point. And the biggest thing is to have that 3 to 6 months living expenses in the bank just in case anything should happen.
Okay. Wow. That was deep and so true. And so those are 3 topics that I'm holding you to coming back. I really would like to dig deeper into that. So we've covered benefits of buying a home, qualifications of buying a home, being pre-qualified, pre-approved, buyer mindset, documentation needed. We've covered gift funds, employment a bit, do's and don'ts while looking for your home, and what to do once you get in. I cannot let you get off the line unless you talk about some current home buying programs and what might be going on today with the interest rates.
Okay, excellent. Let me start with the interest rates. Now it's one of the best times over the last 30 years to buy a home or to refinance a home or whatever the case may be. Interest rates are at a 30-year low because of what's happening in the market.
Okay.
Recently, there was a 12% drop in the stock market. And in general, when things happen like that, that means the interest rates are going down. So anything that's happening bad in the economy, the interest rates go down. And so if it's ever a time to buy a house, now would be the time to get in the market, get the low interest rates, because you're stretching your payment out for 30 years and you're using inflation to your advantage. So a 3.5% rate, if you look at the effective tax benefit to that, a 3.5 rate, you're really only paying 2.75% because you're able to write off a lot of that. So 2.75% for 30 years is nothing. So if you can get in. There are all sorts of programs that help you to get into a home. We have about 3-4 different 100% financing programs.
Okay.
There are 2 costs when you buy a house. You have your down payment and you have closing costs.
Okay.
So when I say 100% financing, I'm talking about the down payment.
Wow.
So they are, and usually on a, for instance, $200,000 loan, you need about $7,000 for your down payment. Well, we have programs that will pay $10,000 and $12,000 and $15,000, pay your down payment and give you some money toward the closing costs as well. So there are a lot of different programs that have come to market. They have made it easier now for first-time home buyers to get into the market and buy homes. So I think now is a great time to get out there.
Okay. Wow. Thank you. Now, do you have any closing comments? I definitely appreciate you coming and joining us, but I would not like for you to get off the line with us if there's some things that we discussed or things we didn't discuss that you want to talk a little more about.
Well, no, I appreciate the opportunity. It was good being here. Again, I just love educating people about home ownership and finances. And I think, again, we need to really kind of look at the benefits of buying a house because and I understand some people need to rent. That's fine. I got that. But there are a lot of people that can buy that don't really think that they can. A lot of people think they need 20% down to buy a house. Well, you don't. And I would suggest that at least see where you are, because the longer you rent, the worse it becomes for you.
Okay.
A homeowner is worth 12 times more than a renter. and because of the net worth. And so you want to kind of get in the market, really take advantage of what's out there for you, because you're going, when I say, I usually say, if you're renting, you're getting poorer and poorer. Really, you are.
Okay.
So you want to get yourself out of that situation and put yourself in a situation where you can grow equity.
Okay. Okay. Well, thank you. I really appreciate your time today. This has meant so much to me, that you would come on and share your knowledge, and that you've offered to dig into some other topics at a later date. I really appreciate it. And you are located in the Prince George's County area, and we will have in our information on how people can reach out to speak with you.
Okay.
Thank you again, and I'll talk to you soon.
All right. Take care now.
Thank you. Bye-bye.
Bye-bye.